With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's going crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come, trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, March 8th, 2024. A little shout out to Jeff who's tuning in, and Dave and Dale and everybody who tunes in. Appreciate it each and every week. So let's go ahead and jump in the numbers. You might recall last week I said, this market, when we look at some of the technical indicators, specifically the DeMark indicators, which I find to be really, really good, things looked a little stretched on the short end of things, and we might be setting things up for a little bit of a pullback. Maybe that has begun. The Dow Jones was down 1% this week, down 0.9. S&P not down much, only down 0.26. The NASDAQ composite down 1.1. And then I like seeing this, the small cap index was up 0.3%. So you may recall, we've been talking about the fact that small caps have been lagging behind. There's a huge disparity right now between the performance of large caps versus small caps, large company stocks and small company stocks. And I think there's a potential for really some pretty extreme outperformance in the small cap space at some point. Will that be this year? Will that be next or the year after? I'm not 100% sure on the when. I feel pretty confident that it will happen. So we do have some extra exposure there. We've chosen to do it in a way that I think is a smart and secure way to have extra exposure to this particular index. What I've done, instead of just doing the broad index, we have an investment that has screened the Russell 2000 small cap index, which 40% of those companies are not profitable, mind you. It has screened that index down to the top 100 most profitable companies within the Russell 2000. These companies have the highest free cash flow and the most profit, so they're going to be less susceptible to higher interest rates because they don't have to borrow to fund their business operations, and they're also going to be better to withstand a little bit of a slowdown with the economy. So I think it's a better way to play it, and I like the fact that the small cap showed a little bit of life this week when everything else was down. The VIX, the volatility index, up 12.5% this week. Still at a relatively tame level, just under 15, 14.7. But again, ticking up a little bit, showing that maybe there's a little bit more volatility in our near future. Looking at some other things, the TLT, your long-term bonds as measured by the TLT, up 1.3% this week. So again, a little bit more money coming back into bonds, rates drifting a little bit lower this week. Maybe some concerns about the economy and where things are in that regard. So we break down the sectors, see if we can glean anything from that. Kind of a mixed bag this week. I can't say that the sectors are very telling this week. And why do I say that? Well, you've had semiconductors, your chip stocks were up 2%, and utilities, which is about as defensive as you can get, were up 3.2%. So both the aggressive side of the equation and the more conservative side of the equation, both up a bit this week. So I didn't see a whole lot to glean from that. But what it was telling was a move in metals. Gold finally starting to break out here, up 4.5% this week. Silver up 5% this week. But gold really breaking out on the charts. We've got a gold miner that I like a lot. We've had it here for a bit. It's out of Canada, Kinross Gold, paying a nice dividend, doing a multi-billion-dollar buyback. I think there's a lot of nice upside there for Kinross. I mean, it was up 10.5%, right? So you'll see an outsized move sometimes with these gold miners as they relate to the metal. The reason why I like a miner instead of the metal itself, the metal doesn't make you any money unless the value of gold is going higher. If it's not moving, it's dead money. When we invest in a miner that's paying a decent dividend, maybe doing a buyback, we're making money even if gold's not moving. We can make some dividends and things like that. And then if gold does move, you tend to see a 2 to 3 times move in the miners versus the metal. So you get a little bit of extra exposure in that regard. So like how all of that looks. As far as what moved the markets this week, a couple of things. Earnings continues to kind of roll out. And, it's been hit and miss. And one of the things that I've noticed, when a company misses, they are getting bludgeoned. I mean, just absolutely pummeled by the market. And when they hit, they tend to go up a lot and excessively rewarded by the market. So I'm seeing extreme moves. That tends to be a sign that liquidity in the market is a little on the light side, right? It's on the light side, not a lot of liquidity. And therefore, you get these moves, these dramatic moves as money starts to move, and there's just not a lot of liquidity in there to support it. So again, all this stuff just kind of points to that maybe this market is a little stretched, and therefore we have continued to do some trimming. Talk about that in just a moment. The other thing that moved the markets this week is economic data. First of all, Jay Powell, he gave his testimony to Congress. And look, I'm going to tell you, I'm not fully buying into the idea that the Fed's not being a little bit political. I hate to say that, but when you look at the numbers and the data and inflation metrics that are still a little bit sticky, and having Jay Powell come out and saying, we are really close to cutting, that's interesting to me because the data doesn't really prove that out right now. I don't see the Fed cutting to maybe the second half of the year. And the other Fed presidents have been coming out and saying, well, we're really anxious to cut, but now maybe we can hold off for a little while and maybe later, maybe fewer cuts. But Powell seemed to be supporting that idea pretty strongly with his testimony to Congress, market like that. And I just found that to be a little interesting, a little fishy, quite honestly. And then, of course, at the end of the week here, we had the jobs number, better than expected, quite a bit better than expected. But there was a big revision down from last month's number, which was a blowout number. It was a stupidly high blowout number. It got cut back by over 100-some thousand jobs. So that was looked like a pretty big misstep in the government accounting of the jobs numbers. But nonetheless, still back-to-back months with over 200-some thousand jobs added. So the jobs market, the labor market still looks strong. The one thing about today's number was that the unemployment number did tick higher, just under 4% at 3.9. And, I meant to mention this a couple weeks ago. One of the things I've noticed in this earnings season, and I want a little shout out to Mike, who I was talking to this past week on a review, and he brought this up as well. I've noticed anecdotally, there's been a lot of companies announcing layoffs, a lot of companies trimming back on their labor force. That's a lot. I mean, a lot of companies, it's a few thousand here, a few thousand there. But as you hear this amongst publicly traded companies in the S&P that are reporting, it has to make you wonder, is that starting to trickle through other parts of the economy? Are we going to start seeing this labor market soften and then unemployment continue to kind of edge higher? When you see the unemployment numbers start to make a good move there, you have to be a little concerned that you could be drawing closer to a bit of a slowdown or recession. Now, it's our base case that recession doesn't happen this year. I don't think it happens this year, but I don't think it's off the table. I'm finding more and more and more people in our industry just completely discounting it now. We're going to have a soft landing, period. Well, maybe we will have a soft landing in 2024, right? But recession can still come about in 25 or 26. Now, the trouble with that is, in my business, if you're too early, you're wrong, right? If you hunker down for a recession, doesn't happen for 3 years, you just lost money. So you can't go too hard too early and be wrong about it. At the same time, this idea that we're just not going to have one, I think is still a bit high in the sky. And I think it's a bit Pollyanna by some of the folks in the profession. I still think we need to keep an open mind to the possibility that recession still looms. I don't think it happens this year, though. So at this point in time, the market seems to be cracking a little bit. That's not a surprise. We did some more trimming earlier this week. I took out another portion off of AMD, which I love AMD, hated to do it. I was looking really hard at taking more off of Rolls-Royce as well, because it just continues to be a juggernaut. It was up another 4% this week. It's up 30% year to date. And of course, AMD's up 40%. But again, looking at the technicals, consulting with some of the best technicians in the country about that, both Rolls-Royce and Meta, it was agreed that not quite ready to do that yet. Meta, that's Facebook, that's up 43% this year, and it was up again this week. So as we take a look at these things, I'm just not ready to trim back a couple of things I would like because I still think that they look good longer term, but I have trimmed wherever it seems warranted. And I took some more off of AMD this week. So we got a nice position in cash right now. I absolutely welcome some turmoil and some pullback in this market. I think it'll be, number one, very healthy for the broad market because it's gone straight up since October. I think it'll allow more capital to come into the market off the sidelines, as many investors, I think, are waiting for a pullback. And it'll give us a great opportunity to step in and do some buying. So I've been working on a shopping list, checking it twice, checking it thrice. Got a list of stocks and investments I'm really interested in buying and waiting for them to work their way down to price targets that look interesting. If they don't quite get there, I might just use the index. We'll see. But we've got some cash on hand. We're ready to do it. So that's a good thing. We're in a great position. I love the performance this week of the models. We really did so much better than the broad market this week. We were making all the money when the market was up, and we were down about, I would say, a tenth as much as the market when the markets had down days. So really holding up very well with our allocation right now. I like the way it looks and ready to make some moves if the market provides that opportunity. So that's what I have for you. I'm going to go ahead and wrap up. But between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's buy a new plane. That's one I don't bring up very often. And I have a couple of pilots and had a great conversation with a pilot this week that loves to fly. So, should be including that, right? You want to buy a new plane, want to buy that second house, retire a little early. You know what your goals are. Don't just think about them. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.